Hey guys, so I'm standing behind my ExxonMobil stock certificate and my Starbucks stock certificate and my Wall Street bull market what is this, a picture. And I wanted to talk about a topic that I think is underappreciated in the finance wealth building arena, and that's margin interest. So we all know margin interest to be bad. You take out a loan, you pay interest, it costs you money, it's bad. A mortgage, right, has interest. Well, traditional brokerage accounts have margin that you can use, and you can, get charged interest. Well, one of the things that's underappreciated about this is at a high level, and if done right, and please consult your tax advisors and your CPAs and your advisor if you have one, the margin interest may be tax deductible to you if you itemize. Now that's a very, very big if, because the itemizing, if you're single and married, are pretty high, and you have to get over that lump sum, which we could discuss later if you want. But if you itemize, your margin interest can be deductible. So it's awesome, right? You are in a 37% tax bracket, maybe you have some state tax and some IRMA surcharge, and you're in the 40%. Well, what better way to reduce your taxes than to have margin interest? So one of the things we can do is we can find you ways to get margin interest that is deductible, and we can find different ways to create more investment income than we pay in interest. So you have a net arbitrage and you're reducing your taxes. It's kind of a win-win. So in another video, I talked about how borrowing against your assets is a very interesting way, because a way to do things, because you don't have to sell and pay taxes. One of the other things that's underappreciated about that strategy is the margin interest that is created is tax deductible. And I may have mentioned that. Anyways, so some of the key things that you want to think about when you are looking at your tax return and if the interest is deductible is, again, are you itemizing, and do you have certain qualified dividends or ordinary dividends or other income from bonds and whatnot that you can use to write off? There's some very specific tax rules that say you need certain types of income to offset and be able to use the interest. So that's a little bit above the scope of the video, but the point is that margin interest can be your friend in terms of offsetting long-term, creating long-term wealth and offsetting short-term income. So in the last 30 seconds here, if you have a purchase you want to make, let's say it's real estate or a private equity fund or a house, you use margin interest to reduce your taxes against your active income today, and you buy an asset that's growing in the future, tax deferred, and it's not creating income, it's not paying you anything that would be a tax consequence. So you're buying a deferring asset in the future, and you're offsetting your taxes today. And the net, if done right and calculated correctly, do add value to your net worth over time. So I'll leave it there. Let me know if you have any questions. Thank you.